All right, so we're finally at the end of Chapter 18 on our presentation and disclosure. I'm just going to focus on a couple of the terms that are probably least familiar or new terms as a result of this chapter. We've got contract assets and contract liabilities. Basically, contract assets come in two types. One is unconditional, and these are recorded as accounts receivable. So that's pretty straightforward. The other type of contract assets are conditional ones, and these we are going to record on the balance sheet as contract assets until the full performance obligation is satisfied. So if you look at the example that is in the notes, you've got a contractor who's supposed to do some cabinets and countertops. They're really not entitled to receive payment for anything until the countertops are delivered. And so it's like, how do we account for this? So this would be an example of a conditional situation where they've delivered, some of the work has been delivered, but not all of it. And the payment or the receipt of payment is conditional on both things happening. Okay, so what are we going to do with this? The first thing is that we would, on the date of the contract, if I'm doing anything here, okay. Okay, on January 1, there would be no entry because we just entered into a contract and nobody has done anything yet, okay? On 2/1, when the cabinets are delivered, we would have a contract asset. We can't go accounts receivable because we're not entitled to payment yet. So the standalone price of the cabinets is $20,000, so we would just go contract assets, $20,000. And at that point, the revenue can be booked, okay, but we can't book the receivable. Okay, so that's where we are so far. Then, once the countertops are delivered, then we're entitled to payment, okay? So now we can go accounts receivable. And you'd go accounts receivable for the full $30,000. You would reduce the contract asset account because that conditional account has now been, the conditions have been met, and so that would be credited for the $20,000. And then you would book the rest of the sales revenue associated with the countertops. Okay, that doesn't make a whole lot of intuitive sense, but if you think about it, it makes some sense. Okay. Contract liabilities are a little bit easier. Contract liabilities, this is basically where on 3/1 the customer enters into a contract. There's no entry because nobody's done anything. That's the easy one. On 4/10, and if you read the notes, it says the customer's supposed to pay in full and so forth. We're going to receive the cash at this point, but the work has not been done, so we are just going to have a contract liability, and we can call that unearned revenue. You could also call it contract liability, but it's what we know as unearned revenue. So cash unearned revenue, and that would be for the $30,000. And then once the cabinets are delivered and installed, then we just do our usual debit the unearned revenue, which is a type of contract liability, and we would credit our sales revenue. Okay, so contract assets, contract liabilities, that's just a very simple example of how they work. Other disclosures regarding revenues, it's very complicated, there's a whole bunch of disclosures. At this point, all you really need to know is that there's a lot of disclosure associated with it. You wanna know things like, how many contracts do you have with your customers? What are any, if there's any judgments related to any of them, and you're just going, I think that will leave for if you're going on to a 4-year, they'll really get into this in a lot more detail. Other things that I do not cover at this point would be the contract modifications. You can be very happy about that, they're a little bit complex. And then the costs to fulfill a contract. Those, I do have the notes provided in case anybody wants to know about them, and if you want to know more about them, just let me know, and I can get to you on that. But those things are not on the test. Okay, so that wraps up chapter 18. If you have any questions, let me know.